By the end of this video, you should be an absolute demon at supply and demand. Make sure to watch the video all the way till the end because I have a surprise waiting for you guys.
All right, guys. So when you talk about supply and demand, you're going to find them in every single form. You're going to find them all the way down from the M1 time frame all the way up to the monthly time frame, and they're everywhere throughout the charts. Now, our job as traders is to only and go identify the highest probability areas that we can use in line with our lower time frame to get some really, really good trades. We can't be just blindly going into the charts and marking every other supply and demand we see. If you do that, you're going to get screwed. So my job here is to show you guys how to identify these and how to really draw them. So before we get started, let me just show you guys how I actually mark these zones. So I'm going to start off by showing you guys. So let's say we have this right here, and then the market turned bearish. And then let's assume that there was some type of break of structure to the left as well. Now right here, basically, if you look at this, the rules for marking the areas of supply and demand, this example is an example of supply. For supply zone, we mark the bottom of the last bullish candle before the push. So here's where the push started. Now, which is the last bullish candle is this one right here. And we will mark the bottom of it. So right here is where should be our supply zone. Not up here. Not here. Not at the body. Exactly at the bottom of the wick. So that we're not going to mark this red candle right here. This is not it. This blue candle right here, the bottom of it is what's going to be our supply zone, right? And it's pretty much the opposite for the demand zone. Let me just draw that out real quick for you guys as well. So in terms of demand, say we have two of these, and then we got this bullish candle. Okay, so when we read this, for a demand zone, we mark the top of the last bearish candle before the push. Push started right here. The last contrary candle, which was this bearish candle right here, we will mark the top of the wick, not the body. Remember that. It's only going to be top of the wick. So we will be marking this is going to be our demand zone. So now you guys know how I draw these zones. Let's get into some of the rules that I actually have right here. So the rules to identify high probability areas of supply and demand. I have three rules when I mark my zones, right? Rule number one is there needs to be a lot of momentum. Rule number two is there needs to be some type of break of structure to the left. And rule number three is that zone should not be used before. It should be an absolutely fresh, unused zone. Now, right off the bat, this is the daily chart right here, and this is actually current time for on Euro USD. Right off the bat, I will give you guys an example of what a supply zone is, and let's go through our rules. So right here, I can identify this area of supply. Why do I call this an area of supply? Well, let's go through the rules. So rule number one, a lot of momentum. By a lot of momentum, I mean big body candles. We're not looking for weak candles with small bodies and larger wicks. We're looking for big body candles and for price to move away from that area really fast. So right here we can see two daily bearish candles, monster candles that are actually moving away with a lot of momentum. So rule number one is met, which is a lot of momentum. Rule number two is break a structure. So we can see this push right here broke this structure to the left and is currently also breaking this structure to the left. So rule number two is met. Rule number one is met. Now the last rule, zone should not be used. So our supply zone in this case is right here. And as you guys can see, price has not pulled back into it yet. So that means this area is absolutely valid. When price comes back into this area, we can definitely look for an entry confirmation to take more sells. Or if it breaks this, then we will continue on to the next supply. So that's an area of a valid supply zone. Now let me look for a valid demand zone. And let's keep this with us so we can go through our checklist. So right here, another area of a valid high probability area of demand. So that example was a supply. Now I will show you guys an example of a demand zone. So the demand zone right here, we can see is right here. So ignoring the fact that it's been used here, before it was used here, this zone was perfectly valid. Let me just go into replay mode so y'all know what I'm talking about. So if we're here, like right here. So let's go rule by rule and see if this area is valid or not. So rule number one is a lot of momentum. So right here, look at these two bullish candles, tons of momentum, huge body candles leaving the area with a lot of speed, right? So rule number one is met, a lot of momentum. Rule number two, break of structure. If you look to the left, there you go. There's your break of structure. So this push right here pretty much broke this structure and this structure to the left. So rule number two is also met. Rule number three, zone should not be used. So like I said, currently this zone is absolutely valid because when price left this area, we never pulled back into it. We actually have not touched this area at all. So currently this zone is definitely valid, right? So this is an area of demand that is valid. And what does price do later on? Price comes, oh, sorry. Sure why this is not working. Price comes into the area. And right here with an entry confirmation, we could have actually took buys, right? And boom, leaves away from the area. So that is an example of what an area of a valid area of demand is, right? Now, now to show you guys what is not a valid area of demand would be this same area right here. Now that prices pull back into it and left from it, we will not use this area anymore. Both of these rules are met. It left with momentum, left with there's a break of structure to the left, but the last rule is not met. This zone has already been used, already been touched. So that is why now this zone is invalid. And it's the same for the supply zone. Like for example, let me bring this up here. I'm sure you guys supply a zone that is not valid, right? So right here, we can see, again, with the three rules, a lot of momentum right here. We have these three huge bearish candles with tons of momentum, big body candles. Number two, we have a break of structure. This area right here, price broke this structure and this structure. But our last rule, the zone should not be used. So if I were to mark the zone, which is the previous contrary candle before the big push, so this last bullish candle before this bearish push, we can see that price went into this area, used it, gave a reaction, went back, used it, reaction, reaction. So for the next time that price is going to be somewhere around here, we're not going to expect this supply zone to be valid because it's already been used by all these zones. So this is an example of how this zone is not valid anymore. Now, before price actually got to this level, like if we were here, this was definitely a valid area because price is not, because all three rules are being met. Momentum, break of structure, zone should not be used. But after we pulled back into it and moved away from it, we broke our last rule, and due to that, we're not going to mark it anymore. Now the last thing that I want to show you guys is whenever price creates an area of supply or demand, it will always leave a void, right? What do I mean by a void? A void is pretty much something like this. Something like this. Something like this that price is creating currently, right? Kind of like empty space, you could say. Right here, this is also a void, right? Um, Let me see if I have any more examples. A void, yeah, right here. This is a void, right? This is a void. So what price does is price always ends up filling these voids. So they can be used as clues into the market on letting us know which way the market is going. I'm going to give you guys a quick example. So let's go back to the same example, right? I'm going to leave this on. So let me mark this as daily. So let's say we came to trade this morning, right? And we had this daily demand zone identified. Another thing that we can identify here is that there's a huge void right here that we're expecting price to probably fill, right? So how we can use these areas are, there's two ways. One way is we can use them as targets. So for example, if we came in this morning to trade and we seen a demand zone right here, a daily demand, and then we seen a void on the left as well, and we were looking to sell this morning, we could use this demand zone as a target. So we're expecting price to come down to this area. So we're going to be looking on the lower time frame to be in line for sells to go to this target, right? And the second clue is that there's a void to fill, and usually price always ends up filling the voids. So if we came in the morning looking at this, exactly this being printed in front of us, we would definitely be looking for sells down to this area of demand, because we got a void and also we have a daily demand zone. So that is how we can use these voids as clues in the market as to right here as well, right? And again, does not mean the price is going to fill the entire void. Sometimes it just fills it till the area of demand and then just continues from there. That is exactly what happened here. So you guys can see price came into it and left away. But if we were here in the morning, we would say void to the left to fill, area of demand. Let's take sells down to that area. So those are the two ways that you can use those. You can use these supply and demand zones in terms of identifying targets. And number two, being used as areas of pivot, areas of reversals, right? Yeah, and I think that is pretty much it. So now you guys know exactly how to mark your supply and demand zones, which supply and demand zones are valid, which ones are higher probability, which ones are lower probability. I hope that was helpful. And then now, as promised, let me just show you guys what the surprise was. So right here, you guys can see I made a official playbook right now for the strategy. I'm going to be making like a better one, but just to show y'all, here's a table of contents and exactly what I showed you guys, marking higher time frame supply and demand zones. Let's just go to that page quickly and we can see I wrote exactly like what you need to do. Pretty much everything that I broke down to you guys is in written form here. And then I also have some examples of like what a valid zone is, same thing that I showed you guys right now, and then what an invalid zone is. So if you guys are looking to get this, it's for free. I'm gonna put the link in the bottom. All you guys gotta do is just in the description. All you guys gotta do is just sign up, put your email in there, and I will send you a free copy of this playbook. And you guys can study it, watch this video again, and you're gonna know exactly how to mark these areas and how to use them in line for some really, really good trades. So I hope that was helpful for you guys. If it was, please leave a like and subscribe. And until next time, see you guys on the charts again.